Hello, and welcome back to Explain the Charts. Today is April 24th, 2025, and we're going to be taking a look at GBPUSD, analyzing both the recent news and the chart data to formulate a trading strategy. Recent news indicates the GBPUSD pair is hovering around the 1.3300 area, influenced by factors such as risk-sensitive assets and a weaker US dollar. US-China trade tensions are also playing a role, creating uncertainty in the market. The Bank of England and Federal Reserve's monetary policies will also likely play a factor, along with President Trump's recent protectionist policies, including baseline tariffs on most goods imported to the US, with higher duties on products from countries like China, the EU, and Japan. Let's start with the daily chart to get a broader perspective. Looking back to late 2023 and early 2024, we see the pair was trading around the 1.26 to 1.28 level. Then we saw a consistent uptrend develop over the next several months, culminating in highs near 1.33 in September of 2024. However, since then, we've seen a significant pullback, bringing us down to the current levels around 1.32646. Now, let's narrow our focus to the most recent price action on the daily chart. We observe a short-term consolidation near the 1.3250 to 1.3300 range. The price seems to be struggling to break decisively above 1.3300. This could indicate a strong resistance level. If we break below 1.3250, we could see a further decline to the 1.3200 level, or potentially even lower towards 1.3150. Let's switch to the hourly chart for a closer look at recent intraday trading. We can see more detailed price fluctuations within the consolidation range we identified on the daily chart. There appear to be intraday support around 1.3260 and intraday resistance around 1.3320. These levels are critical to watch for short-term trading opportunities. Zooming in even further to the 15-minute chart, we can see very recent price action right up to today, April 24th. Notice the choppiness in price movement. The pair is struggling to establish a clear direction. We see a bit of a fight around the 1.3270 level, which could act as minor support in the short term. If this level breaks, it could open the door to further downside movement. Looking at the news, reports of US-China trade tensions could increase demand for the US dollar as a safe haven asset, putting downward pressure on GBPUSD. Conversely, weaker than expected US jobless claims data, which is scheduled to come out today, could weaken the dollar and give the GBPUSD pair a boost. Trump's recent tariffs and any moves by the Fed or BOE could also swing the price significantly. To recap, key price levels to watch are 1.3300 as resistance and 1.3250 as support on the daily chart. On the 1-hour and 15-minute charts, 1.3260 and 1.3320 are important intraday levels to keep an eye on. In the short term, if the pair breaks above 1.3300 with strong momentum, we could see a test of higher levels near 1.3335 or even 1.3400. However, given the current consolidation and the potential for dollar strength due to trade tensions, a breakdown below 1.3250 seems more likely. In the long term, the direction of GBPUSD will depend heavily on the monetary policies of the Fed and BOE and the unfolding of global trade dynamics. We'll be watching those factors closely at Explain the Charts.